Okay, sure. So, question number 8. A Limited issued redeemable preference shares to a holding company Z Limited. See, understand, this is the related party transaction. Who issued whom? A child issued to its parent. In fact, all different name, a parent gave money to its child as a pocket money. And the contract is drafted. As per the contract, it is a loan given. And that loan name is called a redeemable preference share. Because there is a contractual cash obligation to pay cash. It's not a capital. It's the parents told, look, I will give you money for your business, for your education, whatever, but whenever I ask, you have to give me, or after 5 years, you have to give me. Now, the terms of instruments are as follow. It's a non-cumulative redeemable preference share. That means in dividend is non-cumulative. That is, it is not a financial liability. That means you need not pay the dividend. If you want, you can pay. You don't pay, gone. That's why parent will only give you, no? Can bank will give you non-cumulative loan? If you want, you pay the interest, otherwise don't pay. No, that's why it's a related party transaction. But it's redeemable, you have to pay. When you have to pay? After 5 years. That means it's act more like a ZCB now. No intermediate parents. Only one single payment at the end of, like security deposit. When you have to take a loan today, same like ZCB only, Baba. First question, security deposit. Total period 5 years, value of the preference shares is 10 crores, dividend is 0.001%, 100 rupees, leave it, not material. Market rate of interest is 12% off market. Others, please tell me, I also go and take from that Z Limited. Now, present value factor is this, account in the books of Z. Be careful with the word called account. I don't know what they are going to tell you in the exam. They may say analyze in the exam. So, this question requires certain explanations, how you are going to account it. In the exam, they may say analyze how do you, or explain how do you account this. Then in that case, it becomes a theory based followed, no? So, write first solution. Okay, account in the whose books? Z. Who is that? Parent, because for one party it becomes a financial asset, one party it becomes financial liability. In the examination, you may got one twist. Account in the books of A Limited. Same numbers. Everything is same. Journal entry is ulta. So, for Z Limited, this is financial asset. And needs to be initially recognized at fair value. So first you explain someone. They ask now explain how do you account. First you say that look, this is a financial asset. You can explain why it is a financial asset. There is a contractual right to receive the cash because it is a redeemable preference shares. And since it is a financial asset, you are going to recognize initially at a fair value. Since it is an off-market instrument, fair value is measured now. How? By discounted cash flow method. That means you are going to find out the present value of all the future cash flow involved. Since you are going to calculate the present value, fair value, there will be a difference. What you will treat that difference as? If it was a security deposit, you said prepaid loan. If it was a staff loan, you said it is a, what is that called, a prepaid employee discount. If it is a transaction between parent and subsidiary, what you call? You call it investment in subsidiary. It's a loss no to parent, Baba. Is it not a loss? Now, in the security deposit, compensating that loss, my lease rent came down. In employee, I paid less salary. What I did, parent? Parent is loss out of pocket, interest-free loan. So, the difference, right, is investment. That is what I told you previous question. The parents, when you give you 1 rupee, it's actually a loss to your parent. But then they can't pass expense account. No, it is an investment on you. But the financial assets worth is what? Is it 10 crore? No, no. Present value of that 10 crore 5 years down the line is 5 crore. Difference gone. 4 crore is loss from you. But it's not a loss, it's an investment in this question. If this loan, Z Limited has given to some X Limited, unknown party, charge it to P&L account, which Z Limited will not a Bewkoof or fool to do that. It's a financial transaction, no, Baba. Why he will give to an unknown party interest-free loan? That means there must be something, no? I will bring it out. Since you gave this to your subsidiary, as an auditor or as an accountant, I will say that it is an investment. I will write investment in Z Limited, A Limited. Nomenclature you give students. See, no, question is not of nomenclature. Question is, when somebody is a reader of the financial statement, how do you bring out to him? How do you explain to him? Nomenclature you forgot, no? Because nomenclature of the ledger accounts will not appear in your annual statement, no. In the balance sheet or financial statement, when your nomenclature will appear there, nomenclature will appear investment in the subsidiary, that's it. And you have 20 subsidiaries. Every subsidiary you will club and give one single amount. But in notes to account, should you not give this explanation? That's what we are trying to do now. This one transaction we are accounting. Further, right? Okay, so this is some theory. I given the shortcuts of the theory. Further, followed, no? So this is a shortcut. When you read, you have to read this and be careful in the examination question. They may ask you to analyze an account, advise an account, you discuss an account, something like that. Further, now initial done. What about the subsequent? They ask the account, no, when initially or subsequently, till the loan is repaid. Further, what about the subsequent? How do we classify this? Business model test is to HOC, CCFC test or SPPI test is passed. It's going to pass the CCFC test. Why? Because it is assumed that the interest portion, see what you repay, no, it is including interest, because fair value is less. Okay, I'll share more data as we proceed further. Thus, carried at amortized cost. Yes. You can say dividend 0.001%. On 10 crore, it comes 100 rupees. Need not be paying. They may pay, may not pay. So I will ignore it. It's not my financial liability or financial. It's not a contractual right to receive cash. It's not a contractual right, no, because if they don't declare, then gone, no. Can I ask in and can I find the present value of that 100 rupees? It's not for me part of the fair value today for me. If that dividend is big amount and it is cumulative, then along with the principal, I would have included dividend also, and I would have found out present value of every year dividend. It is a contractual cash flow. No, see, my contractual cash flow has got two elements: dividend and principal. If, see, what you are going to pay me, if after 5 lakh 10 crore principal only you will pay me, so I will discount only this. But if it was a cumulative preference shares and 10% cumulative dividend you are going to pay, then I will discount this also, 10% dividend also. So today my present value would have been bigger amount, but I am not going to discount this, because it is already 1%, no, not 1%, 0.001%, and it is non-cumulative. Even though cumulative 0.001% I will ignore because of the material. So are you clear about this? Yes. So first thing is we will calculate the initial recognition, initial measurement. I'll write the heading 1, initial measurement. What do I do in initial measurement? I'll write transaction price. How much? 10 crore. Correct? Less. What is my fair value? 10 crores into 0.56743. 5,67,43,000 is my fair value. So 4 crore 32 lakhs 57,000 is my difference. Since it is not an employee loan, it is not a security deposit, it is the transaction between a parent and a subsidiary. This time I will say that it is an investment in subsidiary. Because I'm going to get the benefit from my subsidiary by giving this loan. What subsidiary is going to do? What benefit I'm going to get? Tell me. Tell me. Why on earth I should give this loan to subsidiary? As a professional, you should ask me. As a student, you will not ask me if you are focused on exam. But you should ask me why I should give this loan to my subsidiary. Because if I give this loan to subsidiary, subsidiary is going to invest on some assets. Assets will earn the cash flow. Tomorrow, they will earn more cash flow and declare dividend back to me. So what I'm planning to do now, instead of earning interest income, I will convert my interest income into dividend income. Because dividend income is tax exempt for me. Interest income I have to pay a tax there. Followed, no? But I'm going to say, no, Baba, I'm not going to permit all those stuff. Okay, I'm going to account it in a different way. I'm going to bring out this fact to the income tax knowledge. You see how I'm going to do it now. Other parents can do that, no? Ultimately, you have to earn income. Instead of earning interest income, you earn and declare me dividend. Finish. And for you, cheap interest, no, cheap loan, right? Without paying interest only, you got a loan. Okay, so I'm done. So next, I'll prepare an amortization schedule. Right, second, amortization schedule. I'll start with the year. 1, 2, 3, 4, 5. Okay, you can just write the heading, okay? Anyhow, now you are good at amortization schedule. So what is my opening balance? What is my opening balance? 5, 67 lakh, 43,000. What is my interest at EIR of 12%, market rate of interest? If instead of to subsidiary you would have given to somebody else, how much interest should have earned? 68 lakh 9,160. Oh my goodness. Did they pay you any money? No. So what is my closing balance? 6 crore 35 lakhs 52,160. Now you just fill the balance and write the heading last thing 10 crore. Okay, you fill it later at home. Students, you can pause the video and you can fill it. Understood? No. Now this will become this balance, again interest, again balance, interest, balance, balance. This is an administrative thing. I don't want to spend time here in the classroom discussing this. I want to spend time with your doubts. More discussions. So we can save some time. Followed? No? I'll proceed further. Next, what I should do? I'll pass the journal entry. What is my journal entry? Maybe in the exam they may ask you journal entry. Preference shares debit. How much? 5.67 crores. Difference? Investment in S Limited, which is going to get eliminated at the time of consolidation. Now, when we learn consolidation, we should think now what is going to happen with this. Then what is the second effect of this? We have to see now. That's why students, other than us in India right now, nobody can understand this. We are the apex body when it comes to accounting. We are the top people in India because we have got absolute monopoly over this document, and the companies need to follow. That's why government of India told company follow the accounting standards index prepared by India, ICI, and we have created this index in such a manner. It's actually simple. I know that once we finish our class, you say, sir, this is very simple. But if somebody reads outside, no, bare standard, they get literally mad there. I told you, it likes that ghost for outsiders. Once you remove this mask, it's like actually very simple exercise. What you're trying to do is trying to bring the substance out. That's why you get empowered students. You have got a demand in the society. Because other than this, please understand, nobody can do this. Income tax department is going to shout tomorrow. They need us only to explain it. Investors are going to hire me. Arey Baba, please understand and tell me what is this financial statement. Then I will explain, Baba sir, they are doing these things there. So investment in subsidiary will be 4.32 crores to bank 10 crores. Then at the end of the first year, what entry I'll pass? Should I pass any entry at the end of the first year? What? What entry I should pass at the end of the first year, students? Okay, this entry is clear. Okay. Should I not recognize the interest income? But I prepared an amortization schedule, no? Security, I'm telling you, it's this question and the security deposit question is exactly same, except in security deposit, this particular amount, you are going to spread expense it over 5 years. In this question, this particular amount is not being expensed it out because it's a parent invested on a subsidiary. Otherwise, you will pass the same preference shares to interest income, preference shares to interest income, preference shares to interest income. And so that this 5.67 crores at the beginning is going to turn out to be 10 crore and you will pass last entry, bank account debit to preference shares. Today, going home, please spend time what you are learning. Try to figure out the interconnections. And actually, the FR is the confidence booster. Once FR goes very well, no, that will follow your AFM also. And generally, FM up to now, FR was only one attempt, it was difficult in all 11 attempts. AFM only on 2 attempts, it was difficult. Sorry? I didn't get you loudly. 2 attempts. Difficult, see, what is the definition of difficult? Difficult means if they give you question as it is, that attempt is easier. If they twist with like the previous question, no, that is considered to be difficult. If I have to see, because we have to define what is difficulty means. In May attempt, 50 mark questions are as it is. As it is means coming from the study material. FR, this last attempt. That means we tag it as a difficult, but somebody should say, no sir, that's the wrong thing. That means they are testing more conceptually. We can interpret it that way also. So if people say testing more conceptually is a difficult thing, then that is a wrong sign, right? I should not say that actually. You say, test me, no, Baba. That's what I'm meant for. Examination is meant for that. More you conceptually test, procedural people will find it difficult. Conceptual people will find it okay. Okay, that was okay, fine. Okay, anyhow, we will not get into that interpretation. So I'll proceed further, students. So you can leave the space and you can just amortization schedule is there. You can just go on adding these entries. Just leave the space. And the last year, you will pass bank account debit to preferential. How did this become preferential? Because every year interest income you are accumulating. But the investment you will not write off. Are you clear? Okay. Yes, students. So next we will move on to the next examination question. Let us see now. I'll tell you. Yes, please pause the video and do the working, students who are on online. Okay, so you can take it as a homework. I will explain you. Now, if you read this question has come for 8 marks. And hope students, online students, you have paused the video and worked and then you are discussing with me. Because for my offline students, I have given it as a homework. They are going to, anyhow, both of you are going to work it out yourself. Because exam question, I don't want to work. I want to only discuss examination question. Now, S Limited issued redeemable preference shares to holding company. Analyze the given situation, applying the guidance of 109 and account this in the books of so and so. Non-cumulative redeemable preference shares, repayment is after 3 years. 1st April they took, 31st March they paid, 3 years. 5 crore is the loan, 0.01%, the similar rate of interest is so and so, present value factor is so and so. You read this in the examination question. Your heart started jumping. The same question, no? Jumping. Will you do this question in the exam? Obviously. Do you see any catch there? Did you see any problem? No. Now tell me, what is the difference between this question and the study material question? The catch, Papa, don't blindly trust them, Institute. The catch is they put one fitting here called analyze, which in the study material question they didn't tell. Now they have done. Now in the new syllabus study material, they have used the proper verbs, not to fool you anymore. That's what I seen. I told you yesterday. Now they said analyze. Now students would have ignored that theory. Out of 8 marks, no, at least 2 to 3 marks would have lost it simply for no reason. You think that is the practical problem. You start doing, okay, schedule 1, present value calculation, then your fair value calculation, pass the first year journal, the amortization schedule. But you will not get full marks because they asked you analyze and account. Followed, no? Okay, so I'll proceed further. So students, you can compare the answers. So first we will write this story. What is this analysis? Like initially, how do I recognize it? How do I measure it? Subsequently, how do I measure it? Same story like what we have done in the previous question. It's a ditto same question. I wish you should do this in the exam. It's not a strategy question like previous one. Okay. So subsequently, I'm going to measure it so and so, so and so, so and so. Working note number 1, initial measurement. My transaction price is 5 crore. Present value of 5 crore with this is 3.55. So this balance is the investment in subsidiary. Okay. Comfortable? I can proceed further. No doubts, no? Okay. Next what you'll do, bro? Not seen, no? Amortization schedule you are going to prepare. Where you start with the opening recognition, fair value. Then you prepare at the rate of 12% for 3 years. Third year interest you are going to put a star and at the note. And it's going to become 5 crore. You need to pass the opening entry, you know. Every year interest entry, you know. And payment entry. So next you pass the first year journal entry is the initial recognition, preference share, investment and to bank. This is the fair value. Then every year, 1st April, okay, is the same entry. Preference shares to interest, preference shares to interest, preference shares to interest. So I'm going to repeat that. Okay. Yeah, doubt, no doubt, no? Okay, next year also I'll do the same thing. And last year, I'll get the paid bank account debit preference. Next question, again it came for the examination. See, if you ask me, in past 11 attempts, in any attempt, there is 1 or 2 questions may get repeated. Once any question comes in the examination, the probability of that question will fall subsequently, very low. It may not come. But if at all it comes, no, it will come with certain twist. Same repetition also may happen, but it is a very low probability. Now you read this. Weak Limited is a fully owned subsidiary of a Strong Limited. Approached Strong Limited for an interest-free loan for mitigation of the financial difficulty. Now who is this? Who approached who? Son approached father. Strong provided a loan to Weak, interest-free, off market. 60 lakhs. 5 crore is turned to be 60. Date of disbursement they have given. Term is 3 years. Repayment is so and so. That means it's like a ZCB. Market rate of interest on the similar loan is 8%, both for holding and subsidiary. That means my discounting factor is 8%. Present value factor is also given. Assuming that there are no transaction costs, you are required to pass the entries both in the books of Weak Limited for all the 3 years. Okay, actually I missed this question. Huh? I mistaken this question. Now tell me, student, okay, let us analyze. What did you understood with this question? Sorry? In the books of subsidiary. So what is going to happen in the books of subsidiary? What is my initial recognition entry? Okay, since you don't do it, you just tell me. Okay, students, you can pause. Actually, there's one mistake, okay? I'll tell you what is that mistake also. But you have to just tell me one thing. I'll give you the number. What is my transaction price? 60 lakhs. Agreed? And you will calculate the fair value. How do you calculate the fair value? 60 lakhs into 0.7938. Correct? It comes to 47 lakhs 62,800. What is the difference? 60 lakhs minus 47 lakh 62,800, 12 lakh 37,200. In the books of Weak, can you tell me what is my initial recognition entry? Students, please pause the video and plot the initial recognition entry. I have told you all the information. Do you need any more information from me? No. See, I have told you transaction value, I have told you the fair value, I have told you the difference also. Can you tell me the initial recognition entry? Please, I will plot. You tell me, I will plot it. Bank account debit to loan Loan account, how much bank? 60 lakhs. Loan, 47 lakhs. To what? See, when a parent gives money to you, for parent what it is? Investment. For you what it is? Papa, it is your capital, no? When the shareholders contribute money to the company, for shareholders it is an investment. For company what it is? Share capital. So it is equity. And my mistake is, this is actually in the books of weak. That means for them it is a financial liability. And I clubbed this in the financial asset part. In the exam, okay, anyhow, something mistake also turns out to be a thing. In the books, actually I made one more mistake, that I discussed all these things. I should have told, please solve this. Anyhow, going forward, I will not make this mistake. What should I do? Please solve it. Then what could have happened? No? Some students would have passed the same entry. What is that? Loan account, loans given account debit, investment in so and so, to bank. Finished, no? Numbers are same. Entry gone. Why? Did you see in whose books you need to pass? And if you see this question, in the examination you get a feel, oh, it's the same question. Parent has given to subsidiary. But there you find one twist in the examination question. When they ask you to pass the entries in the books of subsidiary, but the study material question is in the books of a parent. And in Haribari, if you end up passing in the books of subsidiary parent there, your marks totally 0. How much marks question is this? 5 marks question. Gone? Followed? Yes, students, so you can please pause the video and do the working. We can compare the answer. We'll just check the answers. I'll share the thing, but please do it yourself first. Both the question. Then you can compare the answers. Okay, first thing is same story. They didn't ask me any theory here. Did they ask me theory, advice, discuss and all? No. Straight away I'll do one working note. Present value of the loan is 47 lakh, this thing, which is nothing but a fair value. Then amortization table. I will start with the fair value. Interest I will calculate at the 8%. Third year interest I am going to adjust, and I will bring the balance to 60 lakhs. Okay? Perfectly sitting in your mind. Next, I will go to the difference. On the date of the loan, you took the bank. Loan from the strong, it's the financial liability. That's why you credit. And equity, it is deemed contribution. Where do you show? In other equity. Because you cannot show in equity share capital. It is not a shares issued. Only shares issued you will show in equity share capital. In other equity, did I show you equity and share capital and part A, part B? So it will be part of other equity. In one column, you will plot it. Difference between 60 minus 47, 12 lakh. Then first year interest expense to loan. Previously it was investment to interest income. Second year again interest expense to loan. And the last year loan to bank. Perfect. So see, primarily you need to understand, see, there's one procedural calculation. But when they ask you in the examination, see, in 3 questions, 6 examination questions we discussed by now. That is my plus point for me. The biggest advantage for us is we have got a history of how they may ask examination questions. And you have to skill yourself, upskill yourself. Be prepared for conceptual questions. Yes, with this we have done with all the 3. We can check next, loan to others.